Ever find yourself just staring at a trading chart and feeling that frustration, wondering how people actually make consistent money doing this?
Mm-hmm.
It kind of feels like everyone else has got some secret, while you're just clicking buttons, hoping.
Yeah, hoping for the best. It's a common feeling.
Okay, let's unpack this. Today, we're doing a deep dive into price action trading.
Right.
And our mission, really, is to tackle 3 big questions from the source material we looked at. First, what is this game actually about?
Good question.
Second, how do you position yourself, effectively? And third, can we make this whole thing faster, easier, smoother?
Yeah, and what's fascinating, I think, is how often the really core ideas get buried under, jargon and just memorized rules.
Definitely.
So our goal in this deep dive is to cut through that, pull out the real foundational stuff that demystifies why prices move.
Right.
We want to get you beyond just memorizing patterns to really getting it, intuitively understanding why things happen, because that leads to more consistency.
Okay, so let's start right there. That fundamental question. Why would anyone pay you to just look at charts and click a button?
Yeah.
Seriously, think about it. If there's no solid, logical reason why you're getting paid, well, what are you doing?
You're just gambling.
Exactly. Gambling. Might as well go to Vegas, right? At least it's fun.
That's a really crucial point.
Yeah.
Because, supply and demand sounds simple from everyday life.
Like buying dog food.
Right. You need dog food, you go to the store, pay $20, you get the food. Simple transaction.
Yeah.
But applying that to the markets,
Yeah.
it gets complicated fast. That's where people get lost. It's not just that there's supply and demand, it's the intensity.
The imbalance.
Okay, imbalance. That brings us to that golden key idea from the source.
Mm-hmm.
Imagine there's a huge shortage. Your dog only eats this one brand. Okay, no substitutes.
Good boy.
And the company's going bankrupt. Your store, none left. But your neighbor, they have 10 bags. Bought them for $20 each.
Lucky neighbor. Or maybe not so lucky for you. Right. But now they're not selling for $20. They want $40. Then someone else calls, offers $90 for the lot. Then another person bids $300.
Wow.
And here's the kicker. The bags haven't even sold yet.
Oh.
The price is rocketing up not because people are buying tons, but because they can't get it. They're desperate, bidding it up, basically yelling, "I need it, please sell it to me."
So the rising price is a sign of unmet demand.
Exactly. It means people did not get what they wanted lower down. It's the desperation driving it.
Okay, that makes sense. And the flip side, too much stuff.
Yeah, the opposite. Think Black Friday.
Right, doorbuster sales.
The store has way too much stock, got to clear it out before year end, so they dump it. Huge discounts, just get rid of it.
So aggressive selling. Price drops fast.
Yeah, that aggressive downward move tells you the store, the sellers, they can't find buyers at the higher prices. So, slash, they're desperate to sell. Does that Black Friday analogy kind of click for you, seeing that emotion?
It absolutely clicks. It's the panic to offload inventory.
So what does this all mean for you, the trader? Well, if you're a buyer, you make money when prices go up. Seller when they go down. Simple enough.
Sure.
But the real edge, the game changer, is understanding why it's moving.
The underlying reason.
If you can figure out why it should move because people are desperate to get it or desperate to sell it, then you can consistently make money.
It shifts from guessing to reading the situation.
Exactly. Reading the human behavior behind the price moves,
Well,
capitalizing on those imbalances.
Okay.
Okay, so we get why prices move now, that desperation factor. How do we actually, use this looking at charts?
Right, because it's easy to get bogged down in just memorizing things. Support levels, Fibonacci, trend lines.
Yeah, lines on a screen.
They're just lines.
Okay.
The real understanding comes from what they represent. What behavior is happening there?
So how do we read that behavior?
Well, you look at the speed of the move and how long it takes. That tells you about demand or supply intensity.
Okay, give me an example.
All right, say price goes from $10 to $11, but it takes 10 days. Is that desperate?
No, sounds pretty chill.
Exactly. But what if it jumps from $10 to $17 ints, like 7 or 8 minutes?
Whoa, okay, that's different. Very different.
That screams desperation. People want it now, and they couldn't get it lower.
So as a trader, what's my role then?
Your role is to spot that desperation, that imbalance. You're kind of helping these desperate people out in a way. Maybe you get in lower, say $13 or $14 when they panic, and then you provide it back to them at maybe $15.
You're providing liquidity, essentially.
Exactly. You make money by providing that service, meeting that intense demand or supply, And think about support. It's not just a line where price bounced before.
Right.
Using this, you'd look at how price hits it. Aggressively.
Hmm.
Slowly. And then how do buyers react? Is it a weak bounce or a sharp, fast rejection?
So you're looking for the conviction behind the bounce.
Precisely. Is the desperation to buy still there? That turns a static line into like a live negotiation zone.
This leads right into that no more fashion show idea from the source.
Yeah.
I know, I've done this. Chasing the absolute perfect entry, the very bottom tick. Then you miss it and just kick yourself.
We've all been there.
But it's not about looking good, right? It's not
Right.
for Instagram. It's about doing the right thing consistently to profit.
Exactly. Forget the ego. Focus on the process. You're trying to make a living, not win a beauty contest.
So true.
And think about that testing the waters phase. After a big price dump, a huge discount.
Mm-hmm.
If a buyer suddenly jumps in aggressively, what does the seller, the store, do? They pull back the discount.
Makes sense. Hey, maybe I don't need to sell it that cheap.
Exactly. Hold on. And then, if the buyer still steps up, still buys aggressively, even with less of a discount.
That shows they really want it. Real conviction.
That's it. That's real conviction. And that whole dynamic, that's what creates patterns like the first higher low in an uptrend.
Ah, okay. So it's not just a random roll.
No, it's the logical result of sellers backing off and buyers showing strength. It's the negotiation playing out.
That makes so much more sense than just memorizing buy the first high or low. It gives it substance.
It gives it substance, exactly. It explains why it works. And the source even talked about a trader making over $1 million using this.
Seriously? How?
By understanding this dynamic, there was a specific $102,000 live trade example mentioned, even when the market was just moving sideways mostly.
In a ranging market, that's tough.
Right. But they did it by watching the speed and conviction inside that range. Spotting aggressive buying or selling that hinted at the next move, even without a clear trend. It was all about reading that underlying behavior.
Okay, this is powerful stuff. Understanding the game, reading the behavior. But man, scanning all the markets all the time, looking for this stuff.
Yeah, that's a ton of work.
It sounds exhausting.
Thanks,
There's
man.
got to be a shortcut, right? Some way to filter.
Absolutely. And that's where tools can really help. The source material introduced an app called Market Beats.
Market beats.
Yeah, it's designed specifically to be that shortcut.
Yeah.
Its job is to scan the markets and pinpoint where the real activity, the real demand is heating up.
So it finds the hot spots for you.
Kind of, yeah. It gives you a clear signal like, hey, pay attention here. It tells you which currencies or products are showing significant action right now.
Okay. Is it easy to use?
Seems pretty convenient. It's on iOS, Mac, and they just launched it on Android. Plus, it has notifications and covers different time frames, from 5-minute charts up to 4-hour.
And it has that visual, the bears falling out of the sky?
Yeah, that's their unique way of showing intense selling pressure. It makes it pretty clear what's happening.
But just to be clear, it doesn't tell you exactly when to click buy or sell, does it?
No, that's crucial. It tells you where to focus,
Yeah.
where the potential opportunity might be brewing. It's an alert system, basically.
Got it. An attention filter. So what do you do once Market Beats flags something? Say it says the yen is hot.
Okay, good example. Yen is hot. You don't just jump in and buy at whatever the peak price is, like 145.38 or something.
Right. Chase the price. Bad idea.
Yeah. Instead, you wait. You wait for a pull-in, like traders say,
Mm-hmm.
a pullback, a dip. Basically, you wait for a discount.
Okay, wait for the discount. Then what?
Then you zoom in, move down to a lower time frame, maybe from the 1-hour chart down to the 5-minute,
Why do that?
to see the fine print of that discount.
Right.
How is it pulling back? Is it slow and grinding, or is it falling fast? And critically, are buyers stepping back in aggressively after the discount?
Ah, checking for that conviction again.
Exactly. Are sellers really giving up ground easily, or are buyers showing they still want it, even after a small drop? The key is you have to adjust to what the market is actually doing right then.
Not just force it to fit your pre-drawn lines, like support resistance or fib levels.
Precisely. Forget trying to make the market obey your lines. See what buyers and sellers are actually doing and adapt to that reality.
So this whole approach lets you cut through the noise, find the real opportunities where there's genuine imbalance, and adapt your plan as the market unfolds instead of being rigid.
That's the idea. Flexibility based on real-time behavior.
Okay, so let's recap quickly. We've unpacked the core game understanding prices move because of unmet needs, that desperation.
Right? People can't get what they want or can't sell what they
Then
have.
positioning yourself by reading the behavior speed, conviction, not just patterns, and letting go of that fashion show ego.
Yeah, focus on the process, not the perfect entry.
And finally, using tools like market beats as a filter. A way to streamline things, find where the action is so you can apply that deeper analysis effectively.
Exactly. It helps you focus your energy where it matters most.
You know, the big aha moment for me in all this
Right.
is how it connects back to just, like, everyday common sense. Buying dog food, Black Friday sales.
Right. It's all stuff you already understand intuitively. But people often miss that connection when they look at financial markets. They hunt for some super complex secret strategy.
Yeah, they overcomplicate it.
Totally. But true consistency. It doesn't come from memorizing a million rules. It comes from really understanding the basic human behavior driving it all. Your everyday experience is actually your best asset here.
So here's something to think about, a final thought for you listening. We know money is fundamentally about exchange, right? Service, products.
Basic transactions.
So if you start reframing how you see the financial markets, not as some abstract, complex machine, but as just a series of these simple human transactions driven by need and desperation, how might that change things?
Interesting question.
Not just how you trade, but maybe even how you perceive value and exchange in the wider world around you. Something to chew on.